Hello traders, Gary Wagner here. It is 12:36 in Honolulu, 5:36 in New York on Monday, 6th day of January 2025, and this is the evening report for gold and silver. Now for the second consecutive trading session, gold has traded lower. This as a continued response to the Federal Reserve's recent adjustment to their monetary policy, in which the Federal Reserve is taking a more conservative stance in regards to the number of interest rate cuts the Fed plans to enact this year. Today, gold futures declined by $5.70. That is a net drawdown of 0.21%, taking the most active February contract to $2,647. Today's price decline in gold would have been much deeper had it not been for dollar weakness. The dollar declined by 0.65%, taking the index to 108.257. There is a high likelihood that the correction that began at the end of October, after gold traded to its all-time record high above 2,800, is still active. One possible outcome is that we are currently in our D wave, which will take gold higher, as high as $2,720, a precursor to the last counter wave, the E wave, which could go as low as 2,630. Following that, I believe we will restart the clock and enter an impulse phase with our waves 1 through 5. The most important question we need to address right now is, at the conclusion of this correction, will we enter a primary motive phase with a bull or bear count? Because if gold breaks solidly below this lower level support line, it would be likely that we would enter a bear count, meaning waves 1, 2, 3, 4, and 5, taking gold lower. However, I do believe it's a higher probability that we will see one more rally before we have our counter wave in conclusion, which will restart the clock with a 1, 2, 3, 4, and 5, meaning a bull count. Yet another possibility or another model is, although we do see a series of lower highs and higher lows, what we could be witnessing is a simple ABC correction that concluded on December 19th when gold traded to a low right around $2,600. The definitive answer can only be addressed if we see gold break below this lower level support line or above our current resistance line. When we look at our three primary moving averages, the green representing our 50-day or short-term direction, intermediate in blue, and our 200-day in red, you can see that after moving above the 100-day moving average on Thursday of last week, Friday broke solidly below that, and today we had follow-through selling. It is imperative, if we are going to see gold move back into a positive bullish demeanor, that we quickly take out both the 100 and 50-day moving average. If gold continues to break to the downside, this lower level trend line is of critical importance, because a break below that would be a solid indication that gold, at least for the short term, is still in a corrective phase. That being said, when we look at our moving averages, they have been in full bullish alignment since February and January of this year, coupled with the fact that our stochastic oscillator is in very neutral territory after, in the middle of December, hitting almost 80, then declining below 20, and is now in an upswing, which is why a series of economic reports coming out midweek to the end of the week will be so critical in terms of shaping market sentiment. These reports include job openings, the ADP private sector employment number, as well as the critical non-farm payroll report due out on Friday. These reports will be combined with the inflation reports that will begin with the Consumer Price Index that will be released on January 15th for December inflation numbers. Currently, there is a 91.4% probability, according to the CME's FedWatch tool, that the Federal Reserve will maintain its current Fed funds rate between 4.25% and 4.5%, which means that unless we see the jobs report come in much weaker than expected, we would expect the Federal Reserve to maintain its current stance of slowing down the pace of cutting rates and continuing to pause not only in January, but possibly at the March FOMC meeting. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.